Global debt is rising, while growth from spending is diminishing, according to a November 14 report from the Institute of International Finance. Being addicted to borrowing is never good for an individual. But what about when the global economy gets addicted to debt? Another global financial crisis, worse than 2008, is approaching. Global debt is at mind-boggling levels, said the report. It continued that debt mountain has grown hugely, not only in Asia, but also in the United States and Europe. And governments have become as heavily addicted to borrowing as have corporate and household sectors. This problem is not limited merely to crash-strapped, small nations trapped in China's debt diplomacy. It is a problem for the world's most advanced economies. Modern economic theory says that debt and deficit spending equals growth. The more a nation spends, the more it stimulates the national and global economy by encouraging investment and trade. Although this succeeded in pulling the world out of financial crisis, more economists are realizing that it was only a temporary fix. To shore up the United States recovery, the Federal Reserve lowered interest rates 3 times this year, even as a tax cut-funded fiscal stimulus sends the nation's deficit toward 5% of GDP. Japan is mulling fresh spending while monetary policy remains ultra-easy. And in what's described as Britain's most consequential election in decades, both major parties have promised a return to public spending levels last seen in the 1970s. As for corporate debt, American companies alone account for around 70% of this year's total corporate defaults, even amid a record economic expansion. And in China, companies defaulting in the onshore market are likely to hit a record next year, according to the S&P Global Ratings. Chinese corporate debt is the biggest threat to the global economy, warned a Moody's Analytics economist, who describes such risks as a very significant fault line. There followed similar comments by Fitch Ratings last week, which said that private companies in China have defaulted on their debts at a record pace this year. While corporate debt is a fault line in the financial system and the broader economy, Moody's chief economist Mark Zandi flagged in that Chinese companies as a larger risk. Governments are already very big borrowers, overwhelmingly in Japan, where the government debt to GDP ratio has hit 228%, but also in the United States, Britain, and the Eurozone, where it stands at somewhat over 100%. It is at highs too in places like India, Pakistan, and Malaysia. Those governments from China to Vietnam and South Africa with disguised contingent liabilities because of borrowing by state-owned enterprises could face problems. China might nationalize its debt as Japan did with its bank debt in the 1990s, but the burden will eventually have to be worked off. We should possibly worry even more about the build-up of household debt, especially in the United States and parts of Asia, because it implies that consumption booms in those places are hardly debt-driven, and that households could be squeezed badly if rates rise or in any economic downturn. It's a catastrophic global debt crisis, worse than 2008, waiting to happen. What will trigger the crisis? Low interest rates facilitate unsustainable debt levels, at least in the short run. But with so much debt on the books, even modest rate increases will cause debt levels and deficit to explode as new borrowing is sought just to cover interest payments. Real rates can skyrocket even as nominal rates fall and deflation takes hold. Real rates are nominal rates minus the inflation rate. If the inflation rate is negative, real rates can be significantly higher than the nominal rate. The world is on the knife edge of a debt crisis not seen since the 1930s. It won't take much to trigger the crisis. The Institute of International Finance, an association of financial institutions created after the debt crisis of the early 1980s to help the industry with risks management, has recently released a worrying new report. It shows that the world's total debt surged by $7.5 trillion in the first half 2019, hitting a new record of $250.9 trillion at the end of the period. The report explains that China and the United States accounted for over 60% of the increase. Additionally, emerging market debt also hit a new record of $71.4 trillion, equal to the 220% of GDP. And with this rapid pace, not cooling off, global debt is expected to surpass $255 trillion by the end of this year. With no sign of a slowdown, we expect the global debt load to exceed $255 trillion in 2019, largely driven by the United States and China, the researchers warned. Some have adopted a look on the bright side, position low interest rates, particularly as they open a window for corporate entities to fund their ventures through borrowing. Rate reductions have also been widely used as a way for countries to support their sagging economies. However, with diminishing scope for further monetary easing in many parts of the world, countries with high levels of government debt, like Italy and Lebanon, as well as those where government debt is growing rapidly in Argentina, Brazil, South Africa, and Greece, may find it harder to turn to fiscal stimulus, the IIF said. According to the Institute, the rise in debt levels came as a result of a deepening in the global bond markets, which have increased from $87 trillion in 2009 to over $115 trillion in mid-2019. The bond universe has grown most rapidly in emerging markets, swelling by over $17 trillion to new $28 trillion since 2009, the report said. When debt reaches high levels, its reduction is a subject that receives extensive attention from policymakers who are trying to find the appropriate methods to reduce it. The methodology chosen by policymakers to reduce public debt is vital because it affects the entire spectrum of the economy, market performance, business, and public life behavior. However, for most people, debt is an abstract concept. Even business professionals prefer to ignore its existence. But participation in debt reduction is not optional. It is mandatory for every entity in the economic activity. Since 2008, policymakers in different countries and regions have implemented various methods of reducing debt. Although it seems that they have used different ways to achieve this target, at the end of the day, they all have implemented or intend to implement a well-hidden methodology called financial repression. If we wanted to pay back the total debt owed around the world, one of us would need to donate $1 every second for more than 7 million years. Of course, that isn't a sensible answer, but with 60 countries in financial distress, a more sensible answer does need to be found. $250 trillion in debt. How will that be paid back? I expect an uncontrolled collapse of a major currency, debt market, or bank system that cannot be funded. It is hard to say where it starts, but I doubt it starts in the United States. Chinese and European banks are in far worse shape than United States banks. European banks are getting hammered by negative rates. Japan still struggles with decades of Abenomics. The Fed and central banks brought this on by refusing to let zombie banks and corporations go under and insisting on cramming more debt into a global financial system, choking on debt. But this all has its roots in 1971. Central banks are the enablers, but Nixon's shock set things off. A currency crisis awaits, but the timing and conditions of the crisis are not knowable. It can start anywhere, but I suspect the EU, Japan, or China, as opposed to the United States. Ponder even paying the interest on $250 trillion, let alone the principal. What interest rates will it take? Meanwhile, please reflect on gold. If central bankers now fear that another economic crisis is on the way, but are not willing to admit so publicly to avoid stoking the fire that might consume them, it explains why the establishment is so worried that people will have another system outside of their control to escape to such as cryptocurrency. This is the reason they try to label it as a tool for criminals, for those people around the world looking to protect their savings from another global financial crisis, or from their local government by defaulting on its mountain of debt, turning its fiat money worthless. Private digital assets now appear to be the last solution. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.